Short clip, I'm going to go over exactly how I was able to bottom tick S&P today with absolute precision using a combination of market structure to correctly trade and identify proper levels of supply and demand. Plan this morning to my team was pretty simple. I was looking for longs and SPX demand around 41.09, okay? So this was the write-up. Here was the analysis looking for a fade down to 41.08 and a run of the highs. So let's see what happened and how things reacted. So if we go on SPX, I'm going to clean my chart up real quick just to show you exactly where the level was. Clean this stuff up. Okay, so this was the imbalance right here, guys. Drop base rally demand. So if we take it from the last bearish candle, the open down, we have our level of demand, okay? A couple of things here though. This demand zone did not prove itself until price rallied and broke structure, therefore validating it. So let's put a line here. Let's call this BOS. So basically what I'm saying here is that if I go into a 10-minute chart, okay, this demand zone wasn't validated until the market shot up, right? Thus breaking structure, making it valid demand. If you ever trade zones without confirmation of market structure shift, well, then odds are your levels are going to get absolutely blown through. So when you're basically waiting for market structure to shift, you are literally allowing the market to shift and say, hey, you know what? Trends changing, buyers are out of control. So once we start to get this break of structure, that tells me, hey, buyers are in control, and then we can therefore look for buys out of this demand zone because this demand zone has been validated. So the write-up schematic basically would go like this. If we look left at this action, the market was making lower highs and lower lows, correct? So the expectation is, we're going to keep on making these lower highs, lower lows. But if we look at the most recent lower high that formed a new low, right, it'd be this. So the market doesn't really start to respect demand until you get a shift in market structure. So the market wants to break through with a candle body, not just wicks, because that just will stop hunting. And then what happens is once you get that breakthrough, you then can look for buy opportunities out of demand that formed that caused the break of structure. So the idea is you look for buys on the retracement for a move up, breaking the prior highs. So again, here's the prior highs right here. There's a confirmation of the shift in structure, therefore validating that 30-minute demand zone at 41.08. And as you can see, guys, I'm going to go back into the chart so you can see. Here's a plan looking for 41.09, right? Here is a plan before 41.08. And then we could see here, you just can't make this stuff up. In just an absolute perfect move from demand right here. Now rallying for literally 45 points. So that's how you can combine market structure in your favor. When you are waiting for market structure to shift, you are literally allowing the market to tell you when you can look for buys or when you can look for sells. Some color at the end of the day. Looks like a 5-wave structure going up here, right? Looks like a impulse 1, 2, 3, 4, 5 impulse, right? Because as well, it broke structure, closed above the highs here. So I think a pullback's going to come, but otherwise this is a bullish sequence and would call for more upside, but a pullback in the short term. But otherwise, hope this video helps, guys. This is step-by-step exactly how we were able to bottom fish today, and just another outstanding day in the books. Have a great night. Subscribe to my channel if you are looking for more free educational videos, but study this stuff, guys. Study it nonstop, and the best way to learn is just through backtesting and just through screen time and just learning exactly why the market moves.